This is Agriculture Today, and I'm Chevy Lynn Vasky with the K-State Radio Network. We start today's show with K-State grain economist Daniel O'Brien and senior economist at the IGP Institute, Guy Allen, as they detail what's happening with corn and sorghum. Daniel and Guy continue the show discussing what we are seeing with wheat and highlight the record-high soybean crush. K-State meteorologist Chip Redmond ends the show discussing the recent severe weather and rainfall across the state, as well as some potentially cooler temperatures coming this weekend. That and more is coming up ahead on this episode of Agriculture Today. You're tuned in to Agriculture Today, and we begin Friday's show with a grain market update from K-State grain economist Daniel O'Brien and senior economist at the IGP Institute, Guy Allen. Thank you both for taking the time to join us today.
Thank you very much, Chevy.
And yesterday, there was a WASDE report that came out. Daniel, how is corn looking?
The supply-demand balance sheet for corn had some changes in it, more so in the current marketing year that ends August 31st. Really no change in price prospects at this time, and I see that the futures yesterday responded 5 to 7 cents lower, something like that. So not a lot of movement. On the domestic side, you've got an increase in imports in the 25-26 market year, again ending August 31st. A small increase. And kind of really some shifting around with a projected decline in ethanol usage of 25 million bushels, exports increasing by 25 million up to 3.325 billion bushels. Again, a record high. The weekly numbers have been supporting that. It's been supporting that increase. So stocks to use in the old crop 25-26 marketing year of just a little over 13%. And then that's a small change in ending stocks, 3 million bushels basically, carried over to the new crop marketing year, which will start September 1st for 2026-27, and really no major changes there other than the ending stocks figures went up by about 3 million bushels. Still 1.957, 1.96 billion bushels of carryout. I really think on the domestic side that the corn markets looking towards the results of the acreage report that'll come out here at the end of this month, and I doubt that the July report will be as docile for the corn market supply demand balance sheet as the June one was, because we'll have adjusted acres. The USDA is not in the habit of changing the yield numbers that coming into that next report, the July report. They'll have more data once we get into August, September, but the market will be watching crop development prospects, etc. Right now, it doesn't look like there are major problems, but we'll see where that goes. And we also in Kansas and especially watch the U.S. Grain sorghum supply demand balance sheet, and virtually no changes there. We are watching on a week-to-week basis the projection for sorghum exports. The USDA had earlier in the May report gone from about 225 million bushels projected exports of sorghum for the old crop marketing year to a little bit lower, about 20 million, down by about 20 million to 205 million. So we'll see where that goes. Guy, anything that you see in the world, corn, sorghum, feed grain balance sheets, coarse grain balance sheets?
Yeah, just in a global situation, a little looser situation, not a lot. Coarse grain ending stocks was up a total of 3.2 million metric tons from May. But that's actually down 22 million tons from last year. So while it was up from the initial estimate last month, it is down 22 million tons from last year, which is reflective of a tighter coarse grain situation. USDA similarly raised world ending stocks for corn up 6.4 million metric tons to 303. And that, I think, continues to echo what we've been saying for the last month or so about the corn situation, particularly starting to tighten a bit on that. Global corn crop was increased 14 million metric tons to 1.3 billion metric tons. A lot of those increases coming from Argentina, bigger crop in Brazil, although Mexico was reduced about 700,000 tons, which that should bode well for next year's exports on that, particularly as cattle continue to stay south of the border there. So that's primarily driving that whole coarse grain situation on that. Just to mention China, which we need to talk about, corn production was unchanged for last month at 307 million metric tons, but they're also showing about a 4 million metric ton increase in consumption, just reducing ending stocks by 12 to 166 million. Keep in mind, China is a large carrier of corn ending stocks, and I really don't expect those changes in China to change too much at the time.
Guy, if I can add in too, I think so we're in a waiting pattern right now on here in June 11th, 12th, during that time frame, waiting to see how the U.S. crop develops, waiting to see how the second safrinha crop in Brazil holds up. So I guess a lot of questions still unanswered.
Yes.
Want to comment on that, then go on into transportation? You have some comments on that on the world side?
Yeah, just a final comment on China. One thing we're watching there fairly closely is potential for dry weather. They're the same season we are here, and if that dry weather continues to develop through the summer, particularly in the wake of this El Nino situation, that could bring some more demand in by the end of the year. But that's an evolving situation. So look, it's still early in the season, and there's a lot of moving parts that we're watching. Just shifting gears here for a moment on a couple things. One thing I always like to touch base on is the foreign exchange rate and the U.S. dollar. U.S. dollar in the last couple of days have been a little bit weaker. It's trading just on both sides of 100% on the index. In the wake of increased hostilities, call it in the Persian Gulf, we've seen a bit of a flight to safety into the U.S. dollar on that, but it's been surprisingly stable actually for the last 12 to 18 months, just trading just below 100 on the index. However, we need to keep in mind that that index is driven primarily by the euro and by the Japanese yen, and it does have big moves in that index does have an impact on the affordability of U.S. grain in the global export market.
Yeah, that index is measured as the U.S. dollar relative to other currencies. So it's not just the U.S. dollar; it's how the U.S. dollar is performing relative to these other countries' currencies.
Yes, that's right. That's right. Shifting gears a bit in the global situation, I always look at the dry bulk index markets. That has firmed up over the last month. We're trading that index about 2,000, just over 2,800. The big driver of that has been the increased cost of fuel. Bunker fuel, like all transportation, is your biggest variable expense on that, and we've seen rising crude oil prices. That's been reflected in higher transportation costs. That's going to decrease our competitive advantage against those competitors that are freight advantage. And when we're talking about wheat, we'll look at Australia, and they're just geographically quite close to those high value markets of Southeast Asia and China. If we're looking, though, going into North Africa, Europe, and that area, we've got a bit of an advantage over Brazil, but it's quite hard to compete with those Black Sea origins on that. So we do watch those freight markets pretty close. Sometimes they're off the radar from a U.S. domestic situation.
Guy, fertilizer markets driven by what's happening in the other energies. I'm not so concerned right now for where we're at, but with your international focus, I think by the time if this situation that we're in world energy markets, the volatility and uncertainty continues, then I'd wonder where fertilizer prices end up at the end of the year when South America starts to plant their next crops, and if
Yeah.
that'll push acres towards away from corn to soybeans or just what? Any thoughts on that you've heard?
Well, fertilizer primarily, let's talk about nitrogen. Nitrogen's derived primarily from natural gas. It hasn't seen the same sort of volatility or rally that crude oil has seen. And that hasn't pushed urea nitrogen prices as high as we thought. A lot of it's just availability on the shipping. A lot of that does come out of the Persian Gulf situation or the Red Sea, and that's sort of what complicated things. I think the availability will always be here in the U.S. It's just a matter of price because it is a global commodity. Where I think the bigger problem shows up is as our competitors, particularly in Brazil and places like Australia, where it just wasn't available. And both those locations, Brazil and Australia, their soil types are such as they sort of have to have fertilizer or they don't get a yield. And their yield response from lack of fertilizer is just along with the high price, is just, I think both of those yields will be down below trend this year just because of the availability of the fertilizer per se. China is another country there, being a large producer. Some of those exports have been shut off by the exporting countries to keep it readily available domestically. And China, again, poor soil types, they have to have that fertilizer in order to get that production of not only wheat and corn, but their other commodities as well.
Thank you guys both for taking the time to join us today.
Thank you very much. We'll talk to you about corn and about wheat and soybeans just around the corner.
Again, that was senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Daniel O'Brien. We are cutting to a short break now, but we'll be back with more for you shortly. You're tuned back into Agriculture Today, and we continue our discussion with K-State grain economist Daniel O'Brien and senior economist at the IGP Institute, Guy Allen. Thank you both for taking the time to join us today.
Thank you, Chevy.
Daniel, what are the domestic wheat markets looking like?
Well, they are subdued in their response to this report. Not a lot of major changes. What in essence happened was going forth this month from the May report, we dropped the U.S. average yield for U.S. wheat down to 47 bushels an acre, took off about 18 million bushels from the total production amount down to 1.543 billion. And that 18 million worked its way through all the way down to the ending stocks figure down to 744 million. It was 762 prior to that. So maybe if we have benchmarks that we pay attention to, it is now below 750 million. So that's thought provoking. The USDA did drop the its price projection 50 cents from $6.50 down to $6. Stocks to use now is below 40% down to 39.7, but really not a lot, not surprising at all. I think honestly, if anything, right now we're probably watching the harvest reports on a daily basis, coming through this to look at what protein contents are. Certainly yields in different parts of Kansas, and I think it's not unfair to say we just really have a mixed bag and a lot of poor yields just because of the dryness and some frost damage from earlier this year. So not a lot happening on the domestic side. Guy, how about the international side on wheat?
Well, internationally, we've seen a bit of a mix of things here. World production was pegged at 820 million metric tons. That's down 3% compared to last year's record crop of 843.8 million metric tons. So that's a fairly significant drop in world production. That said, drilling down a bit, Russian production for the coming year was pegged at 88 million metric tons, up 2. Exports were left unchanged at 47 million metric tons. Ukrainian production was forecast at 23.5. Exports are forecast at 14 million metric tons, just up 1 slightly. European EU production was forecast at 136 million metric tons, unchanged. Canadian production, again, steady at 35 million metric tons, but that's compared to 40 last year, which is down 5, and that's on the back of some dry weather up there. The other big mover is Australia. down 2 million tons from last month's at 30 at 28 compared to 36 million tons last year as they experienced some dry weather. Argentina unchanged at 21. India production at 121, up 3% compared to last year's level of 118. World ending stocks projected for this coming year estimated 275 million metric tons versus 280 last year. One of the things I'd sort of like to point out there is there has been a sort of a noted decrease in wheat feeding. So that's sort of a good note in wheat, but it'll be reflected, I think, in the feed grains market.
We put together our numbers. So when you look at these major wheat exporters, every one of them has lower wheat production projected for the next year than they have this year.
Mhm.
And in one or two of those, particularly Australia, where you're particularly familiar with that, they're down substantially. So I don't know what that aims us at out into the future, but the major exporters are looking to have lower wheat the next go around with fertilizer issues and all that. It makes you wonder where we're going at next year in the wheat market.
Yeah, no, exactly. Particularly the Australia situation, since they're immediately tributary to those high valued markets, and they tend to be quality buying markets there as well. That could bode well for U.S. exports, particularly off the PNW in the West Coast.
And let's shift over to soybeans. And I'm saying that because the domestic balance sheet changed in no way at all. It was unchanged. And I think for the domestic side for soybeans, they're also waiting for that acreage report coming here at the end of June, along with what stocks might bring, and watching on a weekly basis the soybean crush numbers and as well as export movement. Guy, I know you've watched closely the crush situation with and looking at the breakout for soybean oil versus soybean meal. Would you like to comment on that?
Yeah, look for this past year we've seen record U.S. soybean crush, and it's running about a little over 8% above last year, which was a record crush there as well. So we're seeing that crush capacity as it comes online increase. The surprising thing is that's also in the wake of we're at record crushing margins. Anywhere the board crush is just under $4 a bushel, a very big number there on that. So that's being reflected in good domestic demand, which I think will continue throughout this whole crop season and well into next year on that. One of the impacts of that is on the export of the products. We're exporting, I guess, fewer whole seed beans. Where we're really trying to compete is on that meal market. We're consuming all that oil, vegetable oil in our biodiesel programs, but we do have a growing supply of meal that needs to be exported. And the thing about soybean meal, you can't really store soybean meal. Once that bean's crushed, that product has to move. Whereas whole soybeans and even vegetable oil, you can store those products for quite a long time. Where we're seeing the biggest impact of that is probably in Argentina exports, where Argentina is sort of changing their domestic structure, and they've evened up the export tax on both whole seed soybeans as well as the products. And Argentina is now exporting more whole seed soybeans and less of the products. So we're sort of seeing a shift in that soybean complex internationally.
Argentina's been blessed of late with pretty good moisture, sizable crops, and
Yes.
they've sold into it. And as you say, are of the mind in terms of their regulatory and governmental programs with regard to that to decrease export taxes. I think, from what
Yeah.
I understand of that, with their leadership there. So
Yeah.
that's been a positive. And Brazil's growth has pretty much been unabated within the. And I invite you to comment on this, guy. Both South American countries had been affected by what the European Union, especially, was doing in terms of trying to tie together production practices for beans that they buy on export markets. And there's a lot of pushback, to state it mildly, a lot of
Yeah.
pushback from Brazil in particular, because of what was being clearly aimed at was the Amazon rainforest deforestation. So interesting to watch. And Brazil's such a strong competitor with us. They have ongoing trends in usage of corn for ethanol, and I don't think it's grown to the corn ethanol usage has grown to the place where it's crowding out exports, but hey, it's there. and
Yes.
interesting to look at.
Argentina's soybean production is up 2 million tons to 50. Brazil is unchanged. One thing I noticed today, not only was the USDA report, but Brazil CONAB had their release, and their estimate for Brazilian soybeans was 180.35. So USDA and CONAB seem to be on the same page this year. Last year, there was that big dichotomy on their two numbers going through the whole season. Just a couple comments on China real quick. Imports remain unchanged at 100 their crush is unchanged at 108. Imports of about 112 million metric tons. It'll be interesting to see how they continue to move forward. Their pricing is, given their position in the marketplace, at times they price Brazil quite different than they do the U.S., as it's driven by a lot of underlying politics there, which tends to frustrate that whole market and those pricing relationships.
Guy, would you like to comment on wheat variety spreads that we've been seeing?
Yeah, the classes of wheat, looking at Kansas hard red winter wheat, 6 months ago, early January, it was trading about even money to Chicago, which tends to be a proxy for the soft red winter wheat. Today, it's trading nearly a 50-cent premium, up pretty close to where Minneapolis spring wheat is trading on that. So that's been a big change, but reflective, one, of the shorter crops in the Western Corn Belt, particularly in Kansas. Also, I think the higher protein levels that are coming off, some of that can get substituted in there. But it's been real hard to define some of these protein and quality premiums and discount at the moment, given the state of harvest and the variability.
When we stand back after looking at this report, it's June, and times of potential stress for the crops are still out in front of us. So I don't doubt our farm audiences, as they have been looking at what's been going on with prices of late, and those prices are affected by U.S. issues, but also migration of funds in and out of ag commodities versus the rest of the financial market. So that is certainly affected in the last week or so what happened with the drop of about a week ago in the grain markets. At least that's our understanding of that.
Yeah.
So we're watching all that.
The exit of the funds money week before last, as we saw that 6-7 day drop in commodity prices across the board, was driven by just a big exit of funds getting out. A lot of that was moving into the stock market and into other areas where there was better returns. But that was one of those historical drops that it ranks up there near the top of a big shift in commitment of traders, and particularly of the large specs in the marketplace. And it sort of shows you how much value they can drive into a particular sector pretty quick.
Thank you both for taking the time to join us today.
Thank you, Chevy.
Again, that was K-State grain economist Daniel O'Brien and senior economist at the IGP Institute, Guy Allen. We are cutting to a short break now, but we'll have more for you up ahead. You're tuned in to Agriculture Today, and we end Friday's show with K-State meteorologist Chip Redmond as he discusses this week's severe weather and rainfall, along with what we see in the forecast. Chip, thanks for taking the time to join us today.
Yeah, thanks for having me.
And Chip, we've had some severe weather this week.
Yeah, we really have. You know, a lot of people think that when the calendar turns to June, we're past our peak severe weather season, and in a way we are with hail and tornadoes, but we also see a peak. While we see the hail and tornadoes become less frequent in June, we see an increase in wind, and that's what we saw significantly this week. Multiple rounds of severe weather. We had one on Friday, another on Monday, and another on Wednesday, and just very active weather as the pattern becomes a little bit more conducive for severe weather with some stronger upper-level winds. And that resulted in mostly wind events. Wind damage, we had reports as high as potentially 100-plus mile an hour. I say potentially because we have to confirm those actual gusts, because when they get that high, they're prone to instrument errors. But I do know on the mesonet, we measured 90-plus mile an hour winds in multiple places, and unfortunately, it resulted in damage, especially to the town of Salina. with widespread tree damage and even some structural damage. Those were the result of a big bow echo that moved through on Monday. On Wednesday night, we had more isolated severe weather, not quite as widespread, but definitely a higher end severe weather. We look at the hail components and even some tornado risk. Thankfully, we didn't really see any legitimate or truly damaging tornadoes outside of one in Riley County last week. With all this severe weather, we did see an increase in rain, in moisture, and this is great for some drought-stricken areas, but most of the precipitation, honestly, has been more weighted to the central and eastern part of the state that did not, or at least were not in the worst drought category or didn't have any drought at all. Impressively, these thunderstorms had rain rates potential to 5 inches per hour, and I know that because we measured 5 inches in an hour at our corning station in northeast Kansas there last Thursday night into Friday. It's a lot of rain in a short amount of time. So that kind of intensity, we saw precipitation totals as high as 9 inches in northeast Kansas. We got 7 to 8 inches around Abilene and many other areas seeing around 5 inches or so. For a week time span, that's a lot of precipitation, and unfortunately did result in some flooding. And we're starting to see some compounding impacts of multiple heavy rain events leading to more long-term river and lake flooding in portions of northeast and north central Kansas as well. So while we got rid of the drought in some places and improved it, we definitely are facing the impacts of maybe too much moisture.
So, Chip, are you seeing some more rain in the forecast, or what's ahead?
Yeah, so we've got a stationary front that's going to be positioned over eastern Kansas through the weekend to early next week. That's going to bring waves of tropical moisture up it and thunderstorm activity, which is, when we add tropical moisture to the moisture we already have, it's going to result in some more heavy isolated rains. And we're going to see potential for 3-4 inches of rain, especially along the Missouri border, where that might compound with previous heavy rain as well and lead to more flooding. Temperatures are going to be cooler with that precipitation around, and with a much cooler, seasonally cooler air mass for June standards, highs struggling to get into the 70s at times, and lows we might even see some 50s there to start Saturday morning. But then after this brief cool period to start, or through the weekend and to start next week, we're going to warm back up by mid next week. And honestly, I think we're going to keep periods of showers and storms around as that stationary front just kind of wobbles into next week, and we never really push that front off. And so we're going to, at least for the short term, keep precipitation chances, although looking out long term, I do think we're going to start to dry out come the end of June into July.
Chip, thanks for taking the time to join us today.
Yep, thanks for having me.
Again, that was K-State meteorologist Chip Redmond with the weather update. We're cutting to a short break now, but we'll have more for you up ahead.